We do turnkey construction. Does anybody know what that term means? Turnkey means everything from start to finish, including the land purchase, is done by the builder. And then like you just said, ma'am, we sell it back to you at the end as part of the contract. The contract is that we are, once completed, the home becomes yours and once we're paid at the closing table. Okay? But no construction loan needed matters more than just talking about it, because there's a lot of expense in a construction loan. A lender is going to require some points. Do you guys know what the term points mean? It's a percentage. A point is 1% of the loan amount. And they charge 1, 2, sometimes 3 points for the privilege of the money. Just to get the money, that it's a fee they charge. And then after you get the money and you secure the financing, every month thereafter that you're building and you're drawing out funds, you get charged interest-only payments for the money that's drawn out. So you start out with a land purchase on those situations, and then you have excavator, concrete, and all the other subcontractors and tradesmen that need to get paid. And so that expense just keeps growing month by month. Come on up, Bill, let's talk about construction loan. Bill deals with a lot of our lenders, deals with our clients day to day. So I'm going to let Bill talk about it.
So no construction loan needed. What we've done is we've allowed any type of loan to buy a new build. So you can actually build a house with any kind of loan. So if you're VA, no money down. Rural development package, no money down. FHA, 3.5% down, you can still build a home. You still get a new home. So with the construction loan, there's a lot of stopping points. There's a lot of special qualification, bigger down payments, stuff like that. With the no construction loan needed package, we have basically we will buy the land. You will put the down payment down that your bank requires. If it's a no money down, then you would put some earnest money. We would build your home. The bank comes back and appraises it, and at the end you walk through it, and then you have a regular closing as if it were an old home. So that's basically what we've done to perfect that. So any type of loan package works. That's the big point here. So if you guys are doing a conventional loan, it works, period.
Okay, thanks. Is anybody in the room at the point where they're talking to a lender and talking about financing? I know you probably are, Harrison, right? Anybody else? No?
Sort of.
Okay. One of the things you want to ask that lender, and this is a kind of a, if you take something away from this class, this is going to be one of the things that you definitely going to want to take away. When you talk to the lender, if you're going to consider a turnkey builder like us, one of the things you can make sure you send the point home is that all you need from that lender is the end loan. The terminology is the end loan. Okay? And what that means to them is that they don't have to fund anything until there's a finished product, by which the appraiser that they're going to hire with you will come out and validate that we just built the home to that standard, that the specifications and the contract stated that we would. Does that make sense? Is that good? Any questions on that? Yeah.
So, just to clarify for me guys, the only out-of-pocket expense for the buyer is whatever down payment their lenders is requiring for their mortgage.
Correct.
Whether it's 10, 15, or 20.
Correct.
And for the plans to be drawn up, right?
Correct, of which we will refund if they go
And
with
that's
us.
refunded later.
Yep.
And that's it.
Yep. So that's a great point. So the loan program dictates what we're going to ask for earnest money in the transaction. Okay. So if you're doing a conventional loan, then that generally means you're putting down 20%. That means you don't need to pay what they call in the business private mortgage insurance, which is an expense that's added on monthly if you're not 20% equity position in the contract. Yes?
So would the 20% be the land and the house?
Correct. The turnkey amount of the contract. And if land is part of that, yes, it would include the land.
and only once.
Okay.
The bank does not take it again when we close. It parlays through us to your bank.
So that 20% that you put down is subtracted, obviously, from the contract that's due at the end. And so you've just escaped PMI, okay, which is a big expense, or potentially big. There's several programs. Now you can do a 10% down program and they'll buy out the PMI with a one-time fee. There's several lenders, several programs. Just check with the lender you are. Now we work with very closely with Saco Benefit Savings. They're here in our building. They rent from us here. Now they have several programs. You also can do what they call in the business a portfolio loan, okay, which is a little bit more liberal in some areas. It gives you more flexibility. It gives you the ability, if you're self-employed, to maybe have a better chance than a conventional loan program because it's underwritten locally and they hold the mortgage locally. They don't sell it off to the secondary market. Does that make sense?
And can Saco Bedford even handle that,
Yes.
the portfolio?
Yes, they're very strong actually at their portfolio package lending because their decision-making is here in Maine, right at their branches. They do an excellent job.
I have a quick question about,
Yes.
just to make sure I understand this correctly.
Yes.
So the no construction loan, if I had a plot of land that I was interested in purchasing.
Great
It's
one.
not your subdivision,
Love it.
you guys would work with us to
Yes.
get that land.
Yes.
Put the house on that one.
Yes, great question. Thank you for saying
We
that.
buy the land, we build the home, the end loan takes over after we're completed.
Yes.
We actually
So-
close on the land.
Yes. And it's probably a good lead-in for me to tell you a little bit more about that land part of the transaction. With us, what we do to help the client is that we negotiate that land transaction as a cash buyer, which matters because when you're negotiating as a cash buyer, there's no bank financing contingency in the contract that seller is going to be squirrely about, right? Oh, Jesus, financing, what could happen? But as a builder with a cash offer for your benefit, this is probably one of the things too that gives us, I'm going to be honest with you and transparent, it gives us a great edge. Because when you buy the lot cash, you can negotiate those terms, the pricing, because you're a quick close for them. Let's say it's the middle of January, freezing 30 below zero, and you really want that piece of land, and you're ready to go. If we offer on that piece of land, and we're able to negotiate that down with a quick closing, you get that benefit. Our business model does not mark that land up to penalize you, or we don't capture that negotiation, the reduction from the list price. So if the land is listed on the MLS for $50,000, and we buy it for 45 or 40, you buy it for 40, 45, that's what gets added to the package, okay? So that's something that is powerful because not many or a lot of builders can just go out there and negotiate that way, okay? So your financing, when you talk again to the lender, you just need the end loan because Chase will take care of the construction funds to pay the subs, pay our people, pay the vendors, the lumber yards, for the windows, doors, cabinets, millworks, moldings, all that stuff. We'll pay those bills. We don't get paid other than the earnest money that is paid up front until the end when we close and we sit and we sign the deed over to you that you now own the home. And it does not, I'll say this out loud again, it does not have to be our subdivision. Okay? Do we like? Yes.
I would say one more thing with the land piece is not what a lot of people don't think about is every time we purchase a piece of property for you, say you found the perfect property, we're buying it cash. As responsible buyers, we're getting owner's title insurance on that property. We can offer you a warranty deed no matter what the situation was before. So we've already done all of the work to make sure that you're getting clear title as we're parlaying the house back over to you. So it is an advantage. It's an advantage to have us buy your property for you and then build the house on it afterwards, for sure.
And again, coming back to the benefit of allowing us to buy that lot for you as part of your package is that you're not getting a monthly bill from that point forward, that's the largest, or one of the largest transaction costs in the transaction is right off the gate. If it's a $70,000 piece of land, we're cutting a check for $70,000. Under a construction loan, you'd be paying 6, 5, 6, 7%, whatever well, not today, it's not 7, but probably close to 4.5%, 5.5% on what you've drawn down, what you've asked that lender to pay. With us, you don't have to pay that month-to-month interest, even though we're paying the bills. There is no gimmick to that. That's not a bait and a switch. You don't end up getting expense somewhere down the line. There's no hidden dart that hits the wall and says, oh, you owe this much. Our contracts with the client are for a lump sum amount of money, and we honor those contracts.